Good afternoon, ladies and gentlemen, and welcome to the BLANCCO Technology Group PLC Interim Results Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated in the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and we'll notify you by email when these are ready for your review. I'd also like to remind you this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Matt Jones, CEO, and Adam Maloney, CFO of BLANCCO Technology Group PLC. Good afternoon.
Good afternoon, and thank you, all of you, for joining Adam and I in our presentation today. We're really going to cover 5 or 7 things today. I'll give you a quick company overview. For some of you who maybe don't know BLANCCO, I'll spend a couple minutes giving you a view of the company and what we do. I'll talk about our first half highlights, both operational and financial. The question always comes up, is there impact on us and from a COVID perspective? And we'll spend a couple minutes on the impact on BLANCCO, both positive and negative. We'll do a financial review. And then we've got really good feedback in the last time we did this and reviewing some market-based customer use cases. It shows how the customers use our technology. And there's 3 markets Adam and I will refer to: the enterprise, the mobile, and ITAD, or IT asset disposition market. And so we'll talk about a use case for each one of those, give a quick ESG update, and then leave time at the end for questions and answers. So just a quick company overview. You know, we're a company that was founded 20 years ago in Finland. We've been listed on the London Stock Exchange since 2016. We're a pure software company. It's worth maybe highlighting a couple things from us, given that's important as we talk about later. One is that innovation is very important to us. And so as you can see, we have over 36 both granted or filed patents, and we continue to innovate in this space, which makes us a real leader and gives us a world-class product. And it's also, for a company our size, we're very much international. And so when Adam talks about our revenue, you're going to see about a third of it is in Asia, about a third of it is North America, a third of it in Europe. You know, I'm based in the United States. Half our management team's in the United States, half is in the UK. So for a company of our size, we have people in 15 different countries and are very much international as we think about our business going forward. We also get some questions about shareholders, so I thought I'd share with you, this slide about our major shareholders. We're fairly, tightly held. Our top 4 shareholders own about 50% of us. Our top 10, about 70% of us, but very good names, very supportive shareholders, and many that I'm sure you know that are UK based, with a couple international shareholders sprinkled in. And from a technology perspective, I thought I'd try to show you on one slide really the technology we have. So you got to think about us as a company that can erase data off any asset, any medium, permanently and auditably. So it doesn't matter if it's the hard drive in your laptop, it's your cell phone, or your iPhone, or it's in a big data center where you have these massive data centers that have virtual machines. We can erase a complete array, we can erase a file. So if data is stored somewhere, we likely can erase it. But it's equally as important that through our management console, we can audit what's been erased and give you an audit trail of what was erased, when, by who. Because with that, it's really important that we can provide, from a privacy, a security, and compliance perspective, a trail of what happened and what you erased. So that's kind of, in one slide, a very simple explanation of what we do. The other thing that's equally as important to our customers is that if we said something was erased, it's erased. And so we spend, and we're very well certified and across the world by agencies that show that when we say something's erased, it's erased. And this is just really a subsection of all the certifications and approvals we have from government agencies and certified bodies around the world about our eraser technology. So let me move now to some quick highlights. And in each one of these highlights, you'll hear more from either Adam and I, so I'll try to move through these fairly quickly. So, we hit our revenue targets for this past half. We were stable at 17.4 million pounds, up slightly from a constant currency perspective. But Adam will give more details why we thought that was, pretty strong first half. And even with that stable revenue, we found very good translation to our bottom line. So our operating profits were up 16%, EBITDA up 20%, and we had a good net cash generating period. We increased our cash by about 3 million pounds over the past 12 months. From an operational perspective, if you've heard us talk before, one of the things that's very important is the enterprise market. It's the biggest market for us, and we're putting a lot of focus on expanding our channels in the enterprise. And so we announced over the last 6 months a worldwide MSA with a global systems integrator. We can't name the name at this point. It's one of the big four in this space. We already announced agreement with Deloitte, and we expanded that further into APAC. It started in India, but it's moving to other regions around the world. We've announced earlier also a relationship with AWS, and we've continued to expand that relationship with their partners. So we announced just a couple of weeks ago an agreement with Carahsoft, which is a very big AWS partner in the US federal and state government market. Carahsoft was already a partner of ours, but we expanded that relationship into AWS. And then you'll see us really kind of launch our first marketing program with AWS in the next month or two that really is focused on their partners and customers. So really starting to put some real emphasis around our AWS relationship. Because of those things, you see channel revenue in enterprise now represent 47% versus 40% in the first half of last year. And I think what you'll see is that continue to go up. And we've also seen from our mobile customers a real significant increase in the number of handsets that are being traded in. Our customers are the third-party logistics companies that work with carriers and others as you trade in your phone. And given the introduction of the iPhone 12 and 5G in general, I think you're seeing a real increase in how our customers are using up our licenses in a much more efficient manner. And so it's been really great trend for them and for us. There's also always a question of how's COVID affected us. So I'll spend just a minute or two on that. So I think the good thing is we see a diminishing effect on COVID in our business in general. The fundamental growth drivers of sustainability and governance and security continue to gain momentum. We did see an impact on revenue in Q4 of last year, which would be April through June of 2021, and then the first quarter of this year. But our second quarter of this year, which just ended in December, was our largest quarter ever. And so we've really seen both revenue and pipelines get back to pre-COVID levels. And we've seen really strong renewal rates across all our customers. In fact, we looked at our biggest customers, anyone that bills over 100,000 pounds with us, and we had a 100% renewal rate. And I think we're fortunate that we don't have a lot of customers that have been affected by COVID. We don't have a lot of customers in the travel or entertainment industry. In fact, we see new use cases being driven from work from home for our technology around security and compliance. And I did mention this, the mobile handset market really accelerating. Analysts are calling this kind of what I would call a super cycle, where the introduction of 5G is really enough for people to buy new phones. In fact, you see new phone sales up for the first time in several years, and people trading in their old 4G phones, which are very valuable. And so you see the super cycle of more handsets being bought, more handsets being traded in, and that all is important for our business. I think the one part of our business that has been or continues to be at least slightly impacted is the Itad business. Itads are companies that will work with enterprises, usually smaller enterprises, to pick up your kit at the end of life. So if you're a small legal firm and you're done with computers, you'll give that to an Itad to recycle and reuse it. Well, because so many locations and so many enterprises are closed, Itads can't get on site to pick up that equipment. So they've seen some impact on their business. And when Adam goes through the details, you'll see it in the numbers. But we do believe in the medium term, which I think is the next 6 to 12 months, you're going to see a big bubble of equipment that's not been picked up over the last 6 to 12 months come through our Itad customers, and that will drive revenue for us in the medium term. But Adam will spend a little bit more time on that as he goes through the different segments from a revenue perspective. So Adam, I'm going to turn over to you, and so you can go through the highlights from financial perspective.
Thanks, Matt. Good afternoon, everybody. It's good to speak to you this afternoon. So as Matt said, I shall take you through the numbers. First of all, looking at the income statement, and I think it's worth spending a little bit of time looking backwards, where 6 months ago, we came out with our last year's set of results, and we were really painting a picture as to how we saw the next year rolling out. And at that point, we were pretty cautious about the first half of the year. We knew we were coming off quite a challenging previous 6 months with the second half of last year and the COVID pandemic beginning to hit. But we also had a very strong first half of trading in the previous year. We grew by 19% in the first half of the previous year. I think the other thing that's key to remember on that is that in that period, we had a very large contract with a US mobile retailer where we were providing a diagnostic kiosk in their stores. It was the only contract of that type, and it was 8% of that previous year's revenue. That contract ended in December 2019. So as we came into this financial year, we had to replace the revenues from that contract, which was 8%, plus deal with the implications of the pandemic, which weren't prevalent in the previous year. So quite a challenge just to match last year's numbers. We were pointing towards a period which we felt would be flat or maybe even backwards a little bit in the first half of the year. So with that picture in mind, we were pretty pleased that we ended up with revenue almost exactly the same as last year at 17.4 million. Revenue grew a little bit, 1%, when you look at it on a constant currency basis. And then on the profit lines, we actually improved. And the reason for that was that we did take some cost protection measures during the heights of the pandemic. So we did freeze recruitment, we froze pay for our employees. We didn't need to make any layoffs or any furloughs, so we didn't have to do anything like that, but we were careful not to grow our cost base too much. We also saw a natural reduction in costs arise from no travel taking place, because with us being such an international business, there's normally a lot of travel in the business, and that reduced to pretty much next to nothing in this period. So our cost base shrunk a little bit, which meant operating profit went up. So operating profit went up by 16% from 2.5 million to 2.9, and the operating margin was 17%. Similarly, EBITDA went up 20% to 5.3 million, and that was an EBITDA margin of 30%. So now when we look forward to the next 6 months, I think we can be a lot more bullish about our prospects over the second half of the financial year. We're going to be comparing against a period which didn't have that big mobile retailer contract in it, so we haven't got that to worry ourselves about. We're also comparing against a period which was very impacted by the beginnings of the pandemic. So last year in the second half of the year, we only did 16 million of revenue. We would normally expect to do more revenue in the second half than the first. So what we'll see in this second half of the year, particularly as we're coming off the back of our best ever revenue generating quarter, is a very much more positive trend, and we'd expect to see very good growth in the second half of the year. Moving on to the balance sheet, the key number for us and probably most other companies is your level of cash. I'm pleased to say we've shown really good cash generation. Since June, our cash balance has picked up from 6.7 million to 8.2. Actually, last year in December, it was 5.4 million. So that's nearly £3 million of cash generated over the 2020 calendar year. So a really good turnaround there. From the debtors side of things, you can see debtors has dropped from 7.3 million to 6.3 million. That very large contract I talked about earlier, that was on net 90 days. So it was a big contract on long payment terms. So the fact that that's no longer in the books has helped us to reduce our debtor days somewhat. So I think other than that, a pretty straightforward balance sheet and looking increasingly healthy. Cash conversion in the business was very strong as well during the period. You can see here, the first half of last year, we only managed to convert 53% of EBITDA in cash. This time it's 102%. So a really good performance. I think 90% for the full year last year is probably more indicative of what we'd expect in a full year. And I think probably the 100% will drift back nearer to the 90% as we go through the second half of the year. But really pleasing to see such good cash conversion. We haven't suffered any bad debts over the past 12 months, which, given the difficulties a lot of companies have been going through, is something, again, that we're very pleased about. And the last slide in the financial section to spend a little bit of time on is just how our revenue splits out, both by geography and also by market that we attack. So Matt mentioned earlier, we really concentrate on three key markets. The first is enterprise. Enterprise, before the pandemic, was really growing at somewhere between 15 and 20% a year. In the first half of last year, we were 28% a year. So these are very big companies, large IT departments, and manage their own IT estate in-house. This will continue to see good growth. We'd expect on the ongoing basis this to grow 15-20% a year at least. In this period, it did shrink a little bit, and the reason for that is the focus for IT teams around the world has really gone away from how you manage your end-of-life equipment, but more around how they can get more equipment in to enable more people to work from home. As businesses start to open up again and things get a little bit back to normal, we do expect a really strong boost to the revenues coming through from this part of the business. And the reason for that is there's a huge amount of equipment that's been bought over the last year, and that means there's a lot of excess equipment out there as well. So if you can think around offices around the world which have been closed, the desktop PCs are still sat on desks. A lot of them haven't been switched on for a year, and a lot of that is going to need to be managed as we move to a more remote and mobile workforce going forward. I believe everyone will be working from laptops, and the desktop PC is going to be increasingly used to a lesser extent. So that means companies are going to want to move those devices out of their premises, and they're going to need to manage the data that sits on them. So that's going to give us a really good opportunity. Itad, as Matt mentioned earlier, that's been the one area which has struggled the most through the pandemic. And the reason for that is these are companies that will come on site to their customers and manage their IT estate for them. Now, in the past 12 months, a lot of companies haven't even opened to their own employees, so they're certainly not opening to contractors to come in. So they've not been able to drive the business that they would expect, but they are also expecting to see a real kick up in revenues once businesses get back to normal, and that backlog needs to be dealt with. And so we'd expect, as business returns, Itad to really pick up strongly. And mobile's an interesting space. As Matt said earlier, we've seen a really big increase in the volume of handsets being transacted by our customers, but it hasn't really come through in the revenue at the headline level. And the reason for that is, again, that one contract which has distorted the numbers. If you took that contract out of the prior year comparatives, we'd have grown mobile by 32% in the last 6 months, in the pandemic. So I think that is indicative of the growth in that market that we've seen recently. And as we come into the second half of the year, that big contract is no longer in the comparator numbers, and so we'll really see strong growth from mobile. Geographically, the split and the trend in the revenues is really reflective of what we've seen in terms of how different geographies seem to have managed the pandemic. So whilst Asia, it feels as though it was very impacted at an early stage of the pandemic, it seems to have managed it much more quickly, not been as impacted, and we saw revenues grow in Asia by 27% over the last 6 months. Last year they grew by 28%, so it's now 18 months of trading we've seen with growth rates of almost 30% in Asia, despite everything that's going on. So really pleased with the progress there. In North America, on the face of it, revenue's gone backwards by 17%. But again, that mobile contract, if we strip that out, revenue growth is closer to 10%. So actually, underlying North America hasn't struggled as bad as Europe, where Europe, we have seen revenues go back by 5%. I think Europe has been more disrupted and locked down over the past 6 months. But we do think this is a temporary blip, and hopefully as we all progress to somewhat of a level of normality, Europe will return back to business. So that's it on the numbers side. Obviously, I'll pick up any questions at the end, but for now, I'll pass back to Matt and he can take you through the next stage.
Thanks, Adam. So let me go through 3 use cases. This will, I think, give you a good idea how customers, think about our technology. So the first one really has to do with the work from home issues that IT departments are dealing with, and they're struggling with as a computer equipment no longer is required by employee who works from home, where they need a new laptop or they leave the company. What they don't want is that laptop to be sent back with all that important information on it and sitting maybe back in office that's empty for months and months. And so we've done 2 things that I think is a new use case for us that's really important for our enterprise customers. One is we provide what we call erasure as a service, a remote erasure solution that an IT department can go on over internet connection, hook up to a computer in a person's home and erase all that data so it can be shipped back securely to the company. So we make it very easy for a company to get that laptop back and make it secure from a security perspective. The other thing we've done is we've integrated this capabilities into a software ecosystem that they normally use. So they have software that manages all their IT assets. We've integrated there. We've integrated in with Microsoft in their endpoint user use cases. So an IT department can literally click on an existing software solution they already use and race that computer remotely. And so if you want to see a video of that, we do have a quick 3 or 4 minute video demonstration of how this would work in an enterprise customer on our website that we'll make sure the links get attached so you can easily see that. Let's go to the mobile place. And so again, both Adam and I talked about this increase of new phones being bought, existing trade-ins and those being bought. And it's created a real opportunity for insurance companies that want to provide insurance for your phones, especially the used phone where they don't understand the condition of the phone. And so what we've done is we have a diagnostics product that we've white labeled to large insurance companies that can run diagnostic tests to understand the condition of that phone before it is insured, including looking in if there's damage on the screen or a cracked screen or anything, because there's a lot of fraud, a lot of waste in the insurance company where somebody drops their phone, then decides to get insurance, and of course the insurance has to pay out for that. So we've literally taken our diagnostics product, white labeled it, and made it part of their onboarding process so they understand the full condition of a phone before it's insured. So it's really an opportunity for us and for them to build our business. And again, there's 2 video demonstrations that are on our website that, again, we'll get links for you so you can see how a customer uses this. This is actually a brand new solution for us over the last 18 months as part of an acquisition we did back in July of 2019 of a company called Enhanced that's based in Ireland that's expanded our opportunity in the mobile market. And the third use case is in the ITADs. And so ITADs, process thousands of pieces of equipment through their facilities every day. And what they want to do is, not every piece of asset, it should be treated the same. Some are very valuable. If it's a brand new PC, a brand new phone, they want to get that through this facility very quickly. If it's a 5-year-old PC or phone, they don't care about. So what we've done is we've created a workflow product we call Intelligent Business Routing that helps identify an asset right at the beginning of its journey through its factory. And if it's a high valued asset, we move through quickly and allow them to understand that. If it's not a valuable asset, they can put it in another line. And it has really nothing to do with our core erasure or diagnostics product, but it's a software solution that allows them to become more efficient, more consistent, and makes our overall solution then more valuable. And so from that perspective, it's a really nice add-on that allows us to provide a really good broad solution to our customers from a software perspective. So Adam, I'm going to pass it back over to you and talk about ESG.
Thanks, Matt. Yes, ESG has become an increasing theme for our business, particularly over the last 18 months. In October 2019, we were one of the first companies to be awarded the Green Economy Mark by the London Stock Exchange. And that was an accreditation that went to companies who are generating the majority of their revenue through environmentally friendly activities, which ours are considered to be, because everything we do is about extending the life of IT assets. And if those assets are obsolete, it's about allowing the materials in those devices to be recycled and reused in making new assets. So it's really a very strong ESG play, and it's becoming increasingly important as we all begin to see these themes get bigger and bigger prominence. E-waste is really a key area for us, and last year almost 54 million tons of e-waste was generated worldwide. And that is a number that is growing significantly every year. By 2030, that's estimated to be at 74 million metric tons. So it's a problem that's just getting bigger and bigger. And because of that, the governments around the world are beginning to look at this and are starting to take action. So in the UK, there was a report commissioned from the Environmental Audit Committee, which was published in November 2020. And the response to that has been due for a few weeks now, but government a little late in responding to it, but I'm sure they've got a lot of other things on the plate at the moment. But once they do respond, we're really hoping there'll be some initiatives coming out of that will play to our strengths. In particular, the report was commending companies who have, and retailers in particular, who have initiated schemes to encourage recycling of electronic assets. Now, naturally, there's a reluctance to take in computer equipment that's got data sat on it. So if you can give some kind of guarantee that all those devices will be wiped and then the equipment can be recycled, that's going to be beneficial for the environment. So anything which is incentivizing companies to have these kind of recycling schemes in place has to be a good news for us. And outside of the UK, we see similar instances. In France, the equivalent of the Information Commissioner has recommended data erasure as a practice and published on their website a link to BLANCCO's website. And the link is on this slide here. There isn't any of our competitors who are named on this slide. So this is we are there as the recommended user for professional companies in France. Then in Japan, another interesting story. I mean, our main competition in the market is the physical destruction of assets, which we understand and see as still being by far the most common way that computer equipment is dealt with at end of life. And often it's seen as a more secure way of managing those assets, but it simply isn't true. And in Japan, it illustrates the reason why. So a government department organised for companies come to their premises, take away all of their IT hardware and get it destroyed. Unfortunately, nearly 4,000 hard drives ended up being resold online with the data still present on those devices, which, as you can imagine, kicked up quite a fuss in Japan. And now the Japanese government have mandated that all IT equipment must be erased before it leaves the premises in Japanese government departments. So again, another movement towards using data erasure. So 3 of the biggest economies in the world are moving increasingly towards data erasure, and this hopefully is an initiative that we'll see followed in other territories as well. I also wanted to mention just some of a UK specific initiative that we've been helping out with. Using data erasure is a fantastic way for us to be able to repurpose old laptops, and we've been supporting a couple of charitable projects that have really been able to take in donated equipment and then see that redistributed to underprivileged children. So we've been working with Wandisco, another AIM-listed company who were originally initiating a project to ask for donated devices in Sheffield so that they could be redistributed. And that project has gone extremely well. They're using our software to wipe those devices, and now they've expanded it to a broader part of the northern region of England. So really pleased to support that project. And similarly, Daily Mail had this article. There's a link to it on this slide, where on the pictures on the left-hand side, you can see our software running on those devices in the computer center recycling plant. So Computer Center have been a customer for a while, and they are using our software to wipe laptops that are then supporting the Daily Mail campaign to get computer equipment out to children around the country. So again, an initiative that we're very happy to support and is hopefully raising awareness of data erasure as a practice, and will see some benefit come through for us in the long term. So I'll now pass you back to Matt to sum up the meeting.
Yeah, thanks. So let me just touch on some key points that Adam and I talked about, and then we'll open it up for questions that are coming through I see already. So, I think revenue remained resilient through the pandemic, and, that translated in increased profits and margins and a stronger cash position, which makes us very happy. And I think really set us up, as Adam said, for significant growth for the second half of this year. We've already seen that in Q2, and I think we continue to see it in January and February. And I think put us back on kind of the growth trajectories where we were before, where we're growing very nicely, double-digit growth from a revenue perspective. We'll continue to expand our relationships with key global players, and I think you'll see in the second half announcement another 1 or 2 that are focused on enterprise. We continue to see strong growth in this resold mobile market throughout 21. And I think we're really happy, and probably most happy, that the drivers that around security, regulatory, and sustainability all have come through the pandemic, and maybe even stronger than they were before, which will enable us to see a kind of medium, strong term growth in the medium term as well too. So I think, really a solid first half, and we're really very much looking forward to come back and talking about our second half as we get through that. So we'll stop there, and we'll we'll take some questions and answers.
Matt, Adam, thank you very much indeed for your presentation. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company took a few moments to review those investor questions submitted already, I'd like to remind you the recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. I'd also like just to resubmit that poll if I could. I'd like to remind you your feedback is important to the company, and immediately after the presentation is ended, you will be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. Matt, Adam, I know I haven't given you a huge amount of time to have a look at those questions submitted during the presentation today, but perhaps I could just hand back to you, and where appropriate to do so, if I could just ask you to read the question and give your answer, that'd be fantastic. Thank you.
Thanks, Paul. Okay, well, the first question that comes in is around the AWS relationship that we have. So, Matt, maybe I'll ask you the first part of this question and I'll answer the second part myself. So the question is, do I understand that you have two strands in your relationship with AWS? The first is a direct relationship as an advanced technology partner, and the second is via Carahsoft. How long have you worked with Carahsoft?
Yeah, thanks, Adam. So I think that is a reasonable explanation. We have two relationships. It started on a direct relationship with AWS through the Advanced Technology Partnership, and now we've even expanded that to be on the AWS Marketplace. And as being part of the AWS Marketplace, you can now kind of buy directly through AWS in your relationship with AWS. The contract is already submitted, makes it easier for our salespeople to sell that. So it's selling directly to AWS customers. Carahsoft is an example of a second relationship where we sell through their partners. So Carahsoft, we've had a relationship with them since 2018. They've sold well over £1 million of our product as an existing partner into the federal and U.S. marketplaces. But this one hooks their marketplace instance to ours. So again, it makes it even easier for us to sell through Carahsoft, because now you can buy through Carasoft's instance of the AWS Marketplace. So I think this is one of those long-term relationships that we build both directly with AWS and with their partners. So Adam, I'll let you answer the second half of that question.
Thanks, Matt. The second half of the question was, what guidance are we giving the market as to how we see revenue growth from AWS? And I guess the answer to that is we're not guiding them anything really on that at the moment. It's too early stage for us to be able to put a number on how we feel that AWS revenues could start coming through. So really any momentum we get from AWS will be on top of the expectations already in the market. It's only really upside. So there's nothing, if for example that relationship didn't take off and generate a lot, we wouldn't be needing to mark our forecast down because it's not in them anyway. Second question, a strong performance. Will you look to make self-funded acquisitions with your growing cash, or do you have enough organic growth to focus on? So Matt, would you like to answer that?
Sure. Yeah. So I think, Adam and I have now been here just about 3 years, and excuse me, I think we've really progressed the company quite well in our position in the market and our financial position. And so now I think we're looking at the kind of the next 3 years. How do we think about growing the company? I think we look at it two ways. One is internal growth, organic growth. And so clearly we have the money there, and it's nice to have some cash, which we didn't have when Adam and I joined 3 years ago, to fund organic growth and see what we can do to grow those figures and grow our top line numbers. But also, I think we're also looking, I think we've been pretty open about, are there things that sit alongside of Erasure in the data lifecycle management as enterprises think about manage their data through its full lifecycle that we want to go acquire? And so from that perspective, we continue to look at how do we fund ourselves internally and drive organic growth, but are there organic things as well too that fit very well with our product that could help our current product and expand our total available market? And from those perspectives, it's good to have cash. Though if we did an acquisition, we may need to do some external funding as well too, because I expect it'll be larger than the cash cash hoard that we have today.
Thanks, Matt. I think the next question is probably one for me, so I'll take it. And the question is, can you explain what you mean when you say ESG pressures are causing companies to look for alternatives for their data erasure before reusing or reselling assets? And then says, page 39, what alternatives are there to data erasure? So I'm not quite sure what that's referring to. It might be page 39 of the annual report or something, but it looks as though if that is the phrase that's used, it's probably not the correct one. So ESG pressures are causing companies to look at alternatives to physical destruction when dealing with their IT assets. I think that's really what that passage is intended to say. So at the moment, we would estimate somewhere between 80 to 90% of IT assets end up in a landfill rather than being recycled. And I think the ESG pressures will be causing companies more and more to start looking at how they can improve their carbon footprint, and recycling and reusing, repurposing IT equipment is a really relatively simple way that you can do that. So hopefully that answers your question. Next one, Richard, it says, at the last presentation, we suggested that we were probably 2 years away from restarting paying a dividend. Has our view on that timescale changed in light of strong business performance? I'll probably answer that question. I mean, it was only 18 months ago that we did a fundraise from our shareholders. So I think most of our shareholders wouldn't be looking for us to be returning cash to them at this point. And part of the reason that we did that fundraise was to make sure we had the firepower to act quickly if there were opportunities that we saw came up, which we felt could help us accelerate the growth of the business. And I think we still feel that way. So I think we would more likely have said that we were at least 2 years away from paying a dividend. And I don't think that's changed at all. There certainly won't be a dividend paid in the next year or two. At some point down the line, if that cash balance continues to grow and we haven't found ways to utilize it, then potentially, but we'd like to think we can keep looking at ways that we can accelerate the growth in the business beyond the level it's already at. Matt, next question for you, I think. What would you say differentiates BLANCCO from the competition?
Yeah, I think that's a great question, and it's a couple things. First, I think it's kind of product completeness. I would say when we survey our customers, no matter which segment you talk about, enterprise, mobile, or Itad, we always get rated as the most complete and best product, and that includes all the certifications we do. It includes our capabilities to patent that technology, and also just the capability to prove that we have done that in a way that meets all their compliance needs and all their security needs. So I think that's one. And so you always see that we're probably the most expensive solution in the marketplace because customers know that we have the best product, and why save a dime or 10 cents or 50 cents or a pence, whatever it would be, to get a less expensive product isn't as good, and it won't prove that all your data is erased. I think the other thing is our capability to do global support. We're really the only company that has a global footprint, and especially when you're working with Fortune 1000 customers, they obviously have facilities all over the world. So we can provide 7-day, 24-hour support. If you're in Asia, we have sales and engineering teams there. If you're in the United States, we have it there. If you're all through Europe, you have it there. So we do, other than China, we do business in every large country and can support you in every one of those large countries. And it's a big differentiation for us as we talk about these global customers.
Fantastic. Thank you, Matt. Thank you, Adam. I think you've pretty much addressed, I think you actually have addressed all the questions we've had through from investors. And of course, the company will review any further questions submitted today, and we'll publish those answers on the Investor Meet Company platform. Matt, perhaps I could just ask you for a few final words just to wrap up before I redirect investors to give you guys some feedback.
Sure. First, thank you for your time today. We appreciate this. Is I think hopefully a great format for us to reach out to individual investors and hear from Adam and I directly, and certainly appreciate your time today. And also just want to, I think, just pat my company on the back on how well they've done through the pandemic. You've really seen us, I think, come very strongly through the pandemic and are well positioned, I think, to take care of the growth opportunities in front of us in the near term. So we really look forward to coming back to you in another 6 months and talking about our progress against all those opportunities in the near term.
Fantastic. Matt, Adam, thank you very much for updating investors today. Could I ask investors not to close the session? You should be automatically redirected for the opportunity to provide your feedback. If you've accessed the meeting from our website, the feedback page will appear directly in front of you. If you've accessed via the link sent in the email, you'll be asked simply to log back in and submit your feedback. It takes just a few seconds. So the company would really appreciate that. On behalf of the management team, Adam and Matt, thank you very much for attending today. That concludes today's session. Thank you indeed.